For years, FICO has been the only scoring model that mortgage lenders use, and now VantageScore is accepted with mortgages. And so this means a lot more people are going to be qualified. So your credit score that you see with Vantage for most people is higher than FICO, meaning it's going to be easier for you to qualify for a mortgage and get a better rate. So with this change, what we'll see is 5 million more home buyers that will be able to purchase because of Vantage being accepted, 33 million more people with credit scores than there used to be, and 12 million more people with scores over a 620. Now, one of the biggest issues with FICO that people have is that it doesn't actually count in a lot of the real payments that you make in your life. For instance, the rent that you pay every single month, the utility bills that you pay every single month. And that's one of the biggest frustrations people have with the mortgage process is they go talk to a lender and they might not get approved for what they want. And they're like, well, I pay $2,000 a month in rent, but I can't get approved for a $2,000 mortgage. It doesn't make sense. So Vantage 4.0, which is now going to be accepted for mortgages, it actually takes into account your rent, utilities, and phone bill as well. It also uses what's called trended data. So instead of just looking at your credit score at one point in time, it actually looks at your usage of credit over time. So are your balances decreasing? Are they increasing? And what does that look like over a time period? Also, it's better for people with limited credit history. So this is fantastic for people who are coming out of college or maybe just haven't used a lot of credit in the past. For those people, it's been difficult for them to get qualified for a mortgage because if you just haven't used credit, the main system that mortgages use to get you approved is the FICO credit system. And so Vantage tends to give better scores for people with limited credit history compared to FICO. Also, on average, people have a higher Vantage score by around 15 points. Some people have even larger, 30, 40, sometimes 60 points higher on Vantage compared to FICO. And you might think, okay, well, that's making more people who are approved who can't afford a mortgage or maybe have difficulty paying back debt. But Vantage is saying that they have a better risk profile, meaning there should be less defaults even with people who have those higher scores compared to FICO. So right now we're in the very beginning stage of this. We first got this info from a tweet of all places, if it's still called that, from the U.S. Director of Federal Housing saying, effective today, to increase competition to the credit score ecosystem and consistent with President Trump's landslide mandate to lower costs, Fannie and Freddie will allow lenders to use Vantage 4.0 score with no current requirements to build new infrastructure, so it stays the tri-merge score, meaning you have 3 credit scores, one from Equifax, Experian, and TransUnion. And so basically what happens here is you have those 3 credit bureaus, Equifax, Experian, and TransUnion, and then you have credit scoring models. So for instance, FICO looks at those credit scores, looks at your history of credit, and then comes up with a score. Now, Vantage does the same thing, but they just use different algorithms. And so for forever, it's really kind of been just a monopoly with FICO in the mortgage world. And now FICO is going to have some competition with Vantage. So hopefully that should lower the costs of credit reports to lenders, meaning lower costs for you, and then also get more people access to home ownership who deserve it. For people who are pay rent, they don't have a ton of credit, but they should still be able to get a mortgage because they can show they've been paying their rent on time, their utilities on time, and they should be able to get approved for a mortgage. Now, again, this is just in the beginning stages here. So this is technically active, but it's going to take some time to implement. So at the moment, I don't know lenders who actively are doing this right now. It's likely we'll see this start to play out maybe at the end of this year, possibly the beginning of next year. And this is because we don't have a ton of information from Fannie Mae and Freddie Mac on exactly all the details of what this is going to look like. So we have the approval from the director, but a lot of lenders are trying to figure out what does this look like in practice. Okay. This is going to only apply at the moment to conventional loans because that's governed by Fannie Mae and Freddie Mac rules. It's very likely, though, that we'll see FHA, VA, and USDA follow suit because they normally tend to do that. It seems to be conventional often is the leader in these types of things, and then we see other loan types follow. And then also, even Vantage has mentioned, this still is like a data-driven approach. They're not just giving people higher credit scores than FICO because they want more people to get mortgages. There are a lot of people with Vantage who are going to have a lower FICO score. And so it's going to be really interesting to see how this plays out with lenders. What I'm imagining is most likely going to happen is that probably a lot of lenders are going to adapt a system where they might do a soft pull for FICO and Vantage and see what score might be higher for you. And then they'll use whatever one of those scoring models has that higher score. So if you have a higher score with Vantage, they'll use that for the mortgage, or higher score with FICO, they'll use that for the mortgage. That's, in my mind, most likely how this is going to play out with a lot of lenders. And this doesn't replace FICO. What's great about this is it increases the competition. It pits them against each other so that they actually, again, have a lower cost product. And then they are actually using better data, better statistical analysis, better risk profiles. That should ultimately end up with more people qualifying and less risk of mortgage defaults in the future. Now, this is going to have a huge impact once this is fully adopted with most lenders. And so there's an expectation of $1 trillion in new mortgages that are going to be created from this just one change alone of allowing Vantage. That's how much it opens up access to people who didn't have scores with FICO to begin with. So that's about 5 million more people who could qualify for a mortgage with VantageScores compared to FICO scores. So this is also going to eliminate the requirement for recent credit activity. And so, the big issue with credit is it's kind of this game that you have to play to be able to get a higher credit score. It's not always just the best representation of the way that you handle money. It's the way that you handle debt. And so, for instance, with FICO, having recent credit activity is going to help keep your credit score up. However, if you don't have credit activity over time, that score is going to go down. And so with Vantage, it eliminates that requirement to have that recent credit activity. And so they even mentioned in one of their documents about how that prevented, for example, active and retired members of the armed services who maybe had a period of time where they weren't using credit, who now will have a higher score with Vantage compared to FICO. It also is going to eliminate credit files needing to be older than 6 months. So this is for a lot of an underserved population and young to credit Americans. So again, people who just are new to credit, who want to buy a house. They have a great track record of paying their rent and utilities, but with the traditional system with FICO, they're just kind of out of luck. They have to go get a credit card and maybe a loan or two to build up a credit profile enough to be able to get a mortgage. And now with Vantage, it's a little bit easier to not need as strong of a credit profile or as old of a credit profile to be able to get approved for a mortgage. Okay, so if you want to use this, when will it take effect? At the moment, we don't know. So we don't have a ton of guidance from the GSEs, that would be Fannie Mae and Freddie Mac. Again, we kind of just have a tweet with the general direction. We have like an intro, hey, this is what's going to be allowed, but lenders aren't going to move on this until we actually see some documentation from Fannie Mae and Freddie Mac. And it's likely going to take a few months, possibly to the end of this year. I wouldn't be surprised too if it creeps into the beginning of next year if we still don't get, it just depends on when we get this guidance from Fannie Mae and Freddie Mac. I will, of course, create an update video once this actually comes out and tell you all the details and what you need to know, if anything, at that point. So in the meantime, what you can do now is work on your Vantage score so that when this is implemented, your score is exactly where you want it to be. So what you can use is a credit monitoring system called Smart Credit. So you can go to smartcredit.com/Kyle, and they have a couple tools in here that you can use to work on your Vantage score. So for instance, they have the score tracker, which obviously you can take a look at what your score is. They also have a score builder and score boost. And so what I like about both of these is they give you actions to actually take, things to work on. So with Score Builder, it's going to give you a 120-day plan, and it will walk you through your current credit profile and exactly what you can do over the next 120 days to work on your credit score. So you review your credit score and then walk through what's helping your credit score. You get to see what's hurting your credit score. And then as you can continue to go through, you can see all the actions you can take through Smart Credit. So things like fixing credit reporting errors, getting a goodwill correction, paying off or negotiating debts, and removing identity theft. And then you can take a look at all the history along with that as well. So simply, if I wanted to take action on something in my credit report, which this is just a demo account here, so I could see Citibank is a problem account on my credit report. And so I could look through here and notice, okay, there's an error, and actually go to take action to fix the error here, and Smart Credit walks you through that. And then with the Score Boost, what I really like about this is it shows you different payment dates to pay on your credit cards to add points to your score. So for instance, we could use this slider here, and it shows us exactly how much we need to pay to see what our future score would be with Vantage. So for instance, if you're around here, you're around 639, for instance, and you're like, okay, I want to get to, let's say, 680. It'll show you exactly how much that will cost But then when we scroll down, it shows you the strategy that you need to take with your credit cards to be able to make that happen. So if you're interested in trying this out, you can go to smartcredit.com/Kyle, and it's a 7-day, $1 trial where you can use all these features here and take a look at how your actions can impact your Vantage score. Now, if you're in the spot right now where you just need some help with figuring out, okay, I really need to improve my credit score, but I don't know exactly where to go. You want a full roadmap. I have a 10-day plan to work on your credit score right up here.